I'm a 23-year-old trader and finance student on my way to becoming a chartered investment manager, and I'm here to help you navigate the markets. So what's going on with our boy Stan Druckenmiller? Looking at the 13F filing of Druckenmiller Family Office LLC, Coupang is the number one holding in this fund since Q1 2023 at a whopping 13% allocation. This is a very aggressive position. Usually, according to backtested studies, for ultimate diversification, a portfolio should have no more than 32 holdings. After that, more than 32 holdings no longer reduces unsystematic risk of a portfolio. If you take $100 and divide it by 32, it gives you about 3% allocation per position. My point is, a 13% position in Stanley Druckenmiller's portfolio in a foreign company, that catches my attention. If Stan Druckenmiller, with a 2.3 billion asset under management, is buying this stock, I think it's fair enough to say that we should pay attention. Family funds and hedge funds spend millions a year on research. Personally, I will definitely keep an eye on this stock. We should get an update in the next coming months about the fund's position. Coupang is on the top of my watch list. Curious to see if they're still holding their position. And yes, I will do an update in the next coming months when that data comes out. So if you like these types of video, don't forget to subscribe. So why should you pay attention to a Korean stock that's down 75% since its peak? For the past month, Wall Street has been aggressively buying all the failed IPOs from 2021 that crashed 50 to 70% during the bear market of 2022. Some examples are Palantir, which is up about 200% since the lows. SoFi is another example as well, which is up about 98% since it bottomed in May 2023. My point is, Coupang could be one of those gems. Looking at the ADL indicator, there is a lot of accumulation for the past 6 months. Meanwhile, Coupang has been going sideways for the past month. This is very bullish. This is a textbook Wall Street accumulation pattern of a company after a failed IPO. You will notice that you never hear about these stocks on mainstream media when the big institutions are in accumulation phase. You always hear about them once they are done buying. Then you start hearing about how amazing the companies are on TV. You start seeing analysts and investment advisors recommend these stocks to their clients. It must be a coincidence. So what do I mean by textbook institutional accumulation pattern? Good example is Twilio, when it went public in 2016. As you can see, when companies go public, they tend to go up for a little while and then they always end up crashing. And the reason why is because of stock lockup and stock expirations from angel investor and employees that were early in the company and received a lot of share compensation. And this is why, guys, you never buy a IPO. Never. You can trade it, but never invest in an IPO. It always goes down regardless of what company it is or how amazing the company is. When it goes IPO, you need to understand it's exit liquidity. And Twilio is a good example because after it went public, it obviously crashed, right? But then look what happened to the price action, right? It went sideways for almost 2 years, guys. But look at the ADL. It went up. Look at all this accumulation. But the price was going nowhere. And I can guarantee you that you were not hearing about Twilio in the news. You can go look at any other IPO, guys, from the past decade and put the ADL indicator on them and you will see the exact same pattern. It goes up, then it crashes, but then you see the ADL starts picking up very aggressively to the upside, saying there's accumulation going on. A recent company that just exploded after doing the same exact pattern is Coinbase, which I called. And as you can see, Coinbase went public, right? Then everybody got out. You had the CEO take profit to go buy a $100 million house. And no, I'm not making this up, right? And afterwards, what happened? We crashed. And then we went sideways. And that's when I was buying. Okay, look at the ADL. This is why I like the ADL. The ADL doesn't give you signals to buy or to sell. but it will tell you when you should pay attention to a stock. Looking at the short flow of Coupang, it's actually quite disappointing. It's only 2%, guys, which is really terrible. I do like to have a high short flow. Coin is a perfect example. When I made my video a couple of months ago about Coinbase, the shortfall was in the 20%, and that's why I started buying it, because I understood that there was some nice momentum that could propulse the stock higher. Looking at the probabilities, Coupang is at a decent valuation. It's very close to the reversal of the means, which is in the ballpark of $15.80, which is a Fibonacci key level support. If the market continues pulling, I do expect Coupang to go back to this support. Afterwards, personally, I do believe that Coupang could easily go to the 23 Fibonacci retracement, which is in the ballpark of $23, which is the next big resistance level. I like using Fibonacci's just to give me an idea of potential levels where a stock can go. So the first PT will be $23, and the second PT, which is my final PT, would actually be the 38 Fibonacci, which would be in the ballpark of $31. Personally, I am waiting to see if Druckenmiller still has the position in his portfolio. Alright, so that's it. Hope this helped. Have a good one and stay blessed.